Hey, Chris, you want that music back on again?
I love it. I love it. I'm doing a little groove over here too.
Boom, 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 boom. Hey, you know what? Maybe I should put my microphone on.
Yeah.
Can you hear me now?
Oh man.
So obviously you could tell, like we were like just we rolled in here like 2 minutes before we went live, and so I didn't have my mic on. I'm listening to the music. I got involved in the music, get all pumped up, and hey, okay, but we're here, guys. Hey,
Bingo.
welcome to our Profit Strategies podcast, live today, August 5th, 2021. Another week is almost over, Chris.
It is. Thank goodness, or yeah, thank goodness. I'll say thank goodness. Put another one behind us.
Yeah, so we got a lot to cover here in our shortened podcast today. I want to talk about the stock market itself, kind of a market overview. We'll do a little bit. I want to do a rewind on the VIX and volatility to let everyone know how that turned out for me and what I'm planning on doing with it, because the week's not over yet. The VIX has dropped, but am I at a loss or am I making money? Going to find that out too. The big news for the week is Robinhood, not the stock, but the options debut. And so Chris is going to be talking a little bit about the options debut and what's going on with the stock options over at Robinhood. And you know, what's been happening. I think they're taking from the rich and giving to the poor. Isn't that the looks like they're taking from the IPOers or the sellers of the IPO and giving it to the folks that still are hanging on to that stock.
Yeah, you know what, though? I got to say before we get into that discussion, isn't it weird to have an IPO that actually works out the way we used to see IPOs work out instead of just one day and then the bottom drops out? Look at this one.
Yeah. I mean, kudos to them and kudos to the direct listing, which is what they did. And also big kudos to allowing folks on their own platform to get shares of this stock. All right.
Yeah,
I was
absolutely
one of those recipients. I said that last week. Last week, I was wondering if I made the right decision because I'm not a big fan of buying IPOs, but I'd never done it that way before through a retail direct listing. So I thought, you know what, let me get my feet wet on this one. We'll see what happens. Yeah. I feel really good about it. And I think Robinhood went a long way to making themselves look better in the eyes of their clients. So I think that was a big thing. We'll get into that and more. Also, what's on my cheap and expensive list and final thoughts too. So let's start off and let's start talking about market overview. So Chris, I'm going to throw some charts up on the screen, and you know what I'm going to do? I'm going to start with Bitcoin.
Love that chart.
So Bitcoin, and if I were to get in here, and what we're looking at, guys, we're looking at a 200-day chart of Bitcoin. I really only need about 125 days. Let's call it 150. Because what I want to do is I want to look inside what's happening right here. And what I'm talking about is the actual Fibonacci graph. So if you've been joining us for the last several weeks, then you know we took a dump from 65,000 all the way down to below 30. We ran back up, and I talked about this 42,693 number, and we tagged that and came back. But we haven't been back for long. We've been seeing now Bitcoin starting to make the move up again. I want to see a cross above 40, and we need to see a close, a day above 42,693, and then I'm liking the mid 40s, and then I'm liking 50,000 and higher. And could this be the lows for the year? We think that might well be happening. You know, and Chris, anything you want to add to Bitcoin?
You know what? A couple of things here. What about Ethereum? Ethereum's outpacing Bitcoin on this bounce here, and it's in the middle of this breakout. Has Ethereum turned into the stronger horse in the race? Is the question.
And the answer is yes, but you know what? You have to look at this one a little differently. All right. So when I'm building a chart, and I'm looking at now, I'm looking at 100 days here, or 150 days. But notice what's happened is we're going from low to high, and we're pulling back. Well, that pullback got a complete breakdown. So we want to get rid of this, okay, because we broke right back down and we triple bottomed just like we did with Bitcoin. But to answer your question means we have to start on the high side, work our way down to the low side, and see where we are on the retracement. So to do that, all I have to do is just switch from a 150-day chart. Probably a 100-day chart will do it. When I do that, lo and behold, there we go. High on Ethereum. Back there at 42. Now, this is a closing high. I know it got the 4,400. I know some of you are going to tell me that. Closing high, 4,200. Closing low, 1786. Look at the rebound. We are above, and we didn't really retrace much at all on this move. We are above the 38% retracement at 2,700. Next stop, 2,982.
Yep.
Looking really good here. Looking really good.
Let me flip it over to something else. And this is awesome as a setup for the Robinhood conversation at some point, but Coinbase. So Coinbase has got earnings coming up. Coinbase has now got a tailwind from Bitcoin and crypto. And you and I, we talked about Coinbase when it came out, when it started trading, and that IPO went the other direction and was actually spot on with the top in Bitcoin. Does this create a perfect bullish storm for Coinbase? The people who've been looking for that bottom, did they just miss it? Because you could have Bitcoin, Ethereum, the crypto world going up. You could also have an earnings report next week that gives it a pop, and you got the technicals. Coinbase Coinbase, if you look at the technicals now, as it breaks above 250, it's taken out those June highs, it's taken out the May highs. So
yeah, I haven't seen north of 300 since I bought that stock. And so, you know what? Hey, I'm here. Scout's honor. I bought it above 300. I also bought it below 300 again and again. And I've moved my break even on this stock. I'm a stockholder of Coinbase, and I own the stock around, I want to say, just south of 270. Okay. Well, look what's finally happening. I mean, we're getting up now, and we're at just south of 255 as of the chart that we see here. And I do think Coinbase is going to, everybody's expecting big earnings out of these guys, but I think when they deliver on those earnings, we're going to see this thing back up in the high twos. And so that's what the chart's suggesting. We're on some really key resistance area right now from the closing high back at the end of June. Here we are, beginning of August, and we're knocking on that once again. And I'm happy to see it back up in this area. And I'm going to tell you something. We go into earnings, which are in 5 days. I will be more than likely adding to my position by selling puts right before earnings. I'm going to sell some puts before earnings and hope to add to that position. If I don't, I'm going to get paid on it anyway. But if I do, I'm going to add, probably to me, I'm thinking about adding another 20%.
I was actually going to ask you about the puts, because I've got them pulled up right now, looking at next Friday's expiration.
Let's see them.
What's that?
Let's see them.
You know what? It is hold on a second.
Can you share the screen there?
Oh, you know what? Let's pull up the big screen. Give me 2 seconds. And there's
because I can pull up some options too. If you can't see them, I'll show them. In fact,
you got it right handy.
I got it, buddy.
Go ahead and let's pop it up on yours.
I got the Aug 6 right now, but we want the August 13th, because those are ones that are going to include that they're going to include that volatility kick. So you can see here, IV on this is right around the mid 80s. So when I'm looking over here on the right hand side, I see the call options. I see the put options on the left-hand side. Here's the stock's closing price as of my screen, current price. But you look at, say, the 250 puts, all right? 255s are really the closest, those at-the-money puts. They're at $13.05. So what we're looking at here, just on the puts themselves, we're looking at somewhere around a little bit north of, want to call it 5%. Does that sound right, Chris?
Yep.
13 and 13 is 26. So we're looking at about 5% of the stock price. But what option traders look at right now, and this is going to change a little bit, but option traders see a 10% pop one way or another. Because what you're basically doing is you're taking that at-the-money call and you're taking that at-the-money put, you're putting those together, and you're looking at that as a percentage of the stock price. So traders are looking for a 10% bounce one way or another to stay in a 10% range once the earnings are announced. But wow, you come down a little bit. Look all the way down to, let's say, the 230s. Even the 230 puts, which we were at 230 not too long ago. Even the 230 puts next week.
2 days ago. Yeah.
Yeah. 4 points. You get $400 for that option just to sell it. And now you're on the hook to buy the stock, but you're buying it at $230 a share.
Right.
So, all right. So let's kind of move on back to our market overview, and so let's pop on over to the stock market itself. So to do that, I am going to move over to my stock charts. I've got volatility all set up and ready to go, Chris.
All right.
And so to me, it's all about the wishy-washiness of the market at the current levels. When you take a look at SPY, you can see right here, we are having a heck of a time closing above this 440, that 441 level, really. 441 seems to be a really great area of resistance. And we hit it once, twice, 3 times, 4 times. Today we touched on it. I mean, it's five times we're hitting the ceiling. Are we going through, Chris?
I don't think so, Tom. You know what? I've noticed something, and I'm sure you've noticed it here too. There's something hinky going on with the VIX. We've had these up days on the S&P 500, and we're getting up days on the VIX, and then we're getting the down days, and we're getting the update. The VIX is acting hinky, and whenever I do this is I explained this to a few people I was talking to. The spidey senses start going off with you, and you kind of go, "Ooh."
Okay, so let's hold aside there for a second. You grab a chart on the VIX, if you will, and before you show that, I just want to show a couple of confirming things. All right. I want to do a little confirmation here. Now, this isn't a religious exercise, all right? I'm not appealing to the Catholics out here, but the confirmation I'm talking about is confirming what's going on with the overall market. So the one thing that I like to look at is, what are the bonds doing? The bonds are not exactly falling off. They're kind of holding up there right now, as if they're starting to create this little tense moment of, is the stock market going to drop, and do we need to hang on the bonds?
Right.
When you take a look at the cash markets, so cash has come back a bit from where we were 2 weeks ago, but still it's on the high side of summer as well. And then, when you look at commodities and oil, and I really, last week I talked about oil. I talked about oil being bearish. And with the exception of today, which was a little bit of a reversal you see going on here, USO for the most part is absolutely bearish. I'm on the right side of this. I'm holding put spreads in USO, and I'm planning on holding those through a little bit longer. But if I can get a double out of these, I'm going to step aside. But where I'm going with this is that if we're going to get soft in commodities, soft against what? Soft against the US dollar. And if the commodities are getting soft, that's going to pull down at least to a minimum on some of the stocks out there, including oil stocks. All right. Leaves me to gold. Gold was really impressive yesterday at the open. It just kind of it lost its shine. All right, no pun intended. And today we're getting a little bit of the same thing, but it really is just still trading the box. It's been trading the box for a month now, and the box is, though, I'm talking about between the support at 168 and the resistance at 171. I really want to see a close above. I really want to see 172 on this. We get 172 on this, then I think the high 170s are the next area to go. But it doesn't really want to show us that. It just keeps kind of meandering right back and forth between this 3-point range. That leads me to VXX, which is the VIX futures. Now, Chris, I wanted you to bring up a chart of the VIX and show it to everybody. And I want to take a look at the VIX, the VIX versus the VXX, so that we can get a little bit of a assimilation.
This is... here we go. Here comes the share for you.
Yeah, give me a chart here, and I'll put it on the screen for everybody. There's the Chris Johnson chart, and away they go. All right,
there's your VIX.
You're looking at something a little different than what I'm looking at here, so I gotta squeeze in here and look at this. So I do see what you're saying, that there's this bottom that formed. Is that a month ago?
The bottom right here, that is June.
Yeah,
you had that double tap on that 16 in June, and then again at the beginning of July. And as you know, that's when we're heading into earnings season. Everything, volatilities go up during earnings season. We know that. We pay more for options, so you see volatilities go up. But you had that tap when we went up above 20 and then popped. And it was, remember that Monday? It was that Monday when everything fell out very quickly, and then we recovered back up. I said last week, the VIX always knocks twice. It hasn't knocked twice yet, but man, that VXX, when you show that chart of it just getting smash down. And we know that there's some slippage there and all types of things. But
Yeah.
this is what concerns me. We have had a market that has been kind of bolstering higher, and yet you look at the VIX and it is just not wanting to go down. People are paying up right now. My spidey senses are definitely starting to think that we're heading into something that should be a little weaker right now.
Okay, and that brings me to my chart. I want to show you my chart on the screen. So this is the VXX futures. These are what the folks in the future are thinking. And as you can see, it's been decisively heading down the last 3 days. So on our program last week, I said I was going to be looking at selling puts on the VIX to try to capture some premium, and I did. And I sold, full disclosure, last week I sold the 29.50 puts. All right, so I sold the 29.5 puts, and I got a $1.14 for them. All right, so right now they're trading at 69 cents. So even though VXX on my chart is now trading at 29.11, well below the 29.50 put, because I got a $1.14 for them, my break even is somewhere down around 28, below 28.5. So, Chris, I'm hanging on to these for another day, and I want to see where they end up going. But more than likely, from where we are right now, I am going to initiate a roll on the VIX. I'm going to initiate a roll on the VIX, and what I want to do is, taking a look at the VIX and volatility, I want to probably buy these back and simultaneously sell next week's. But I'm going to do something that's probably a diagonal. I don't know what I'm going to do till tomorrow. The market's going to change. What I do know is that I will be initiating something where I'm going to be buying back the options that I shorted. And I'm going to sell. And if it were right now, if I were to do it right now, I'd probably do a diagonal where I would buy back the 29.50s and I'd sell the 29s in the next week and then see what I could get for that trade. I'd be lucky if I eked out a credit. I'd probably be able to do it for even. But the thing is, I'm rolling that forward. I'm going to lock in the profit that I've taken. I've taken some profit. I had a lot more yesterday and the day before we had a little bounce back. And the bounce back I'm talking about is as the market moves lower, this is hurting me. This was my best day of the week, which was Monday. All right. And then, it was Monday, happy days. Tuesday, not so happy days. Wednesday, even worse. Thursday, I don't know.
Hey, you know what? Let me interject because I love it when we get a teaching moment here. Why don't you explain to people what you mean by diagonal? People have heard about rolling. What do you mean about when you throw in the diagonal word there?
So a diagonal is what I'm talking about doing is potentially taking a trade that I have on, closing out the portion of the trade, and then opening a new portion, but at a different strike. All right. So if I were to, let me see if I can throw something up on the screen that would look like this. I'm going to remove the quantities so that I at least I want to go in and show everything. But I mean, you can do this with even one. This is I got a pretty decent trade on here. This isn't crap by any means. But if you notice here's the 29 halves. And then what I'd look at is right now the at the monies are the 29s. And I would select that into the 13th. So, I'd be buying to close what I shorted. Right now they're 66 by 68. Look at the 29 halves. If I rolled back into those, I could roll into that for a credit. But those are in the money, Chris. So I would probably look at maybe come down to the 29s. And then the 29s are 95 by 98. So I could still do this for a small credit. So what I'm doing is I'm taking money. All right. Remember, I sold these for about $1.14. So what am I taking? 60, 70, 80, 90. Oh, okay. So I'm taking almost 50 cents off today. So I'm going to lock in at 50 cents, but I'm also going to bring in another 96 cents. It's basically I'm rolling forward. I'm actually rolling forward a potentially 80-cent profit. 80-cent profit. I've already taken almost 50 cents of that. So a roll is basically this. Close out what you got, reestablish a new position, future date. A diagonal would be doing different strikes. So that's what I'm doing here. Roll from 8 to 8:13, and roll down from 29.5 to 29. All right. Hey, guys, tell me if that helps satisfy the questions out there or comments. Throw some comments in the screen. Love to hear from you as I move over and look at, let me look at some comments we got going on here and see what everyone thinks about that roll that I'm doing. All right. And the first thing I'll say before I even look at comments is that, yes, it's going to have, I mean, there, shorting puts has, that has a bit of risk to it. But, I'm looking at this and I'm thinking, if I want to be bearish on the S&P, this might be the least riskiest way to do it because there is some sort of a floor that I'm seeing that's happening right there. All right. So that's what I'm looking at there. So, Chris, let's get into some stocks, and you know what? Let's talk about a bit of a meme theme. And you talked about Robinhood, so let's pop in and talk about Robinhood. They debuted their options this week. Right. Robinhood really went nowhere until the options debuted, and the options debuted. The stock doubled, more than doubled in price before settling out, going from the 30s as high as 70 before coming back down into the 60s. High 60s today. We're down, 10% or so. What do you think? Did the Reddit crowd just wake up and say, let's trade Robinhood now because they have options?
Well, no, I think they did. I think it's interesting. The Reddit crowd, I think, has been all over Robinhood. And let's trace this back to where the Reddit crowd really started. And I mean, it was built on Robinhood. So I'm not surprised to see that crowd of people just jumping into Robinhood. Today, you're getting a day where it's a little bit of a sell. If you were in Robinhood yesterday at $85 and you see it pull back to 70, you're wanting to maybe lock in some of the profits, especially if you got in at 45 or somewhere around there on the second or third day of trading. But I think that crowd, let's not start throwing out the word diamond hands and all of that, but this is one of those crowds that will come back and circle back and pick it back up again at $55. I think the stock makes a triple-digit price here within the next week or two. I mean, this is going to be one of those feeding frenzy type of situations for a little while. You and I both know when you look at Robinhood and the business that they're in, and the business that they're in is volume, right? Yeah. It's selling volume. At some point, that's going to catch on again, and ironically, I think Robinhood will turn into part of the machine that the same Reddit people have been trying to fight against. But for the time being, this is just hot money, and they're going to rake it in right now. I think the options, obviously, they're a little pricey right now. They'll even up a little bit when we see volatility go down. I think you're going to see people playing the stock.
So, Chris, do you see this big red slash across my screen here?
I do. It looks like the hammer of Thor across your screen.
It's a hammer, all right. But this is what an option trader sees. For me, I don't start tracking stocks until we have options that trade on them. So this is all the data I have right now on Robinhood, and that was yesterday's options debut. And so, when you look at that, I'm like, wow, I got quite a bit of data that needs to be filled before I can get an idea of what's cheap or expensive. But when you look at these, the option prices, and I can do that right now, I can come on out and I can go look at options on Robinhood on our chains, and we can get an idea of what volatility is looking like right now with these traders in the hood. Wow, look at that. 192 on the vol side. Here, this is the 60. I'm showing the 62s, which I believe might be the lowest option call strikes, the ones that I have. So if I go out to the next week, they add them on. They're probably adding on in real time. But let's go look at August 20th because that's got a week to go, a little more than a week to go. There you go. So here's your 65s, 175 vol. Now, what was the VIX trading at just a minute ago? Did you happen to notice?
VIX trading around 16. What do you got to print on the VIX that is? I'll give it to you live
16,
here.
17. So is it safe to say, Chris, that Robinhood's IV is 10 times that of the VIX?
Well, you as well as I. Yeah, I mean, it is. Absolutely. If you look at this, I think after the last 3 days worth of trading, it absolutely earns that moniker of being 10 times more volatile.
Look
Absolutely.
At the 200.
Oh.
I mean, we're talking about, like AMC, GME during their heydays.
In the thick of it.
This is where the volatility is. And I am looking at this one. I'm looking at trying to figure out a selling strategy in this because it's crazy. It's going to come with risk, though. But, we could look at selling vol. I don't have to sell straddles, although that's going to give you the best income if it's going to give you the most amount of risk. I can sell strangles, a little higher probability. Still, there's a little risk. I could go out and look at condors. That gives me fixed risk and fixed return. There are many ways to skin this cat. But, hood is definitely where everybody is right now. So, in that theme, as we're in the meme stocks, let's just take a look at one more. And Miguel's asking about it. So I'm going to bring it up for Miguel and the rest of the group. And that's what's going on with AMC. AMC, and I'm going to bring the stock chart up for AMC. Obviously, I got a little bit more than one line. But I'm telling you what, the diamond hands are getting cut up on this one. What do you think? I mean, look at that thing. 70. That was June. The high in June was 70. The high in July, you go over here to July, we're probably talking about 55. And I mean, by the time we got out of the last couple of weeks, we're down in the mid 40s. Today, we're in the low 30s. Is this going to be the high for August? Are we just going to step down 10 points at a time? I'll tell you what I am seeing. I'm seeing guys that got their whole YouTube channels revolved around GME, AMC, and their subscribers, the number of subscribers are starting to fall. Now, I don't have tens of thousands of subscribers on our YouTube channel. First of all, I'm 56. I'm not that crowd. But you know what? I'm planning on sticking around for a while in the area of trading. And by doing that, that means I'm not throwing everything I own at one stock, or more importantly, call options on one stock, because there are people last month that are not here today, Chris. There are people last week that are not here today. Buy the dip, die the dip. This is becoming a double scoop, triple scoop dip. The only thing that's tasting good on this is if you've got an ice cream machine next to you, because that's all you're going to get out of this. Buying calls on this is the most ridiculous thing in the world.
Well, and if you look, I'm looking across the other meme stocks here. I mean, BlackBerry, same pattern. GME, same pattern. AMC, same pattern. All of these companies falling into the same pattern now. And how much of that money is just getting sucked into the new meme stock, which is ironically Robinhood. I mean, it's the king of meme right now, right?
It is. And that's where the money's going. Because there is no infinite pool of money, folks.
It is
out there. It's going to go where people go where the action is. And then they don't stick around for that long either. And what's been happening in this particular game is those who get to the action first are the ones that stand to profit. Everyone that follows, not so much. So I would rather take a rules-based approach to it than looking at things in terms of what is everybody else doing. I want to go where everybody else is. Where everybody is this week or last week, they were at Lollapalooza. I wasn't at Lollapalooza. Had no reason to be there. Didn't want to be there. I don't care whether you're a vax or an anti-vax. You really don't want to be in a crowd like that.
Yeah.
Whether you support vaccines or you don't, I think all of us kind of agree that, the sane and the normal, hey, watch the thing on somebody's live casting it. If you want to see Miley Cyrus, if you want to see the Foo Fighters or whoever's up there on stage, live cast that thing in the comfort of your own home.
All right. Here's my confession for you, Tom. You ready?
Yeah, I'm ready. I already know what you're going to say. Go ahead.
I saw the Foo Fighters last week.
I know Wednesday. You did. We talked about it last week.
Yeah,
or were you socially distanced?
And mask.
Yeah.
Put the mask on too, which was the first time I pulled the mask out. I had to wash the masks because I pulled them out of the drawer and smelled them and went, oh man, was this on my face? So yeah.
You wearing it as a sock. Chris, did you wear your mask as a sock one day?
No. But as well as I do, when you wore those things around, they got that musty, and then you put it in a drawer for a month or so because everything's getting okay. And bam, all of a sudden you got a load full of masks in the laundry.
Yep.
Speaking of which, Pfizer, Moderna, going through the roof here. Everybody's running to the vaccination stocks again. Pfizer's actually pulling back now after seeing a huge amount of crescendo volume, kind of like what we're seeing in AMD and a few of these stocks that are making a run. is that whole trade? And when you look at it, Etsy, terrible earnings, the stock bounces back today and fights its way back again. Chewy's coming back. The pandemic stocks are coming back. Is that a question mark? I said that was my inflection. Yeah. Are they?
Man, good question.
I mean,
and
maybe that's a placeholder for the next talk.
Let's move to some options that are the worst ones to be buying and the ones that are the best ones to be buying as we round out this podcast. And for that, I'm going to go to my app. And all of you in the room have access to this app. All you got to do is go out to the Apple iPhone store, or you go to the Google Play Store, and you can grab this list that I get. I get it every single day. Let's talk about what we're seeing here. Top 10 most expensive options on the board, the ones I don't want to be buying. Xilinx, ADI, KWeb, TCOM, Cold, KSU, RMD, Hubs, AMD, and CNI. I was looking at AMD. The volatility on all these are high, but AMD is through the roof, and they already announced earnings. AMD is getting grabbed by the meme crowd too.
Yep. Oh, yeah.
AMD is hot right now because everyone thinks AMD is hot and Intel is not. And that's where they want to put their money. Folks, let me tell you, buying these call options, not the thing to do. I'm actually looking at selling them because I think AMD might be overdone. But if you want to look at stuff to buy, let me tell you what I see on the buy list. X, that's US Steel. That was on the sell list last week. All right, their earnings are now behind them. They've gone from an expensive option to a cheap option. Hey, guess what? By the way, Chris, you know what I did last week with X?
What's that?
I sold it. I sold puts on X. All right, profitable move. In fact, let me see what my X trade is right now. My X trade. So I sold these puts last week. The 25 puts. Sold them for 51 cents. They're at 14 cents right now. They expire tomorrow, and they got really cheap just in the last day or so after the earnings report. So, that's what I did. Now I'm looking at maybe I should buy them back now that they went from expensive to cheap. But look what else is cheap. You want to buy calls on Twitter? Now's the time. You want to buy puts on Twitter because you think it's overdone? Now's the time because their options vol is not at a 94. It's down at 37.03, the lowest that it's been in a year. Same goes for HZNP, ABC, STM, Twilio, CHTR, SEDG, SPT, and Logitech, LOGI. All of these, when you see the second column there, it says low IV, and you see current, and they're both the same, Chris, this just tells me these guys are hitting new lows for the year in options volatility. So if you're bullish or if you were bearish, this list over here, you don't want to be a net buyer. This list over here, you don't want to be a net seller. You want to be a net buyer. These are the options I'm looking at to sell premium on, the expensive side. These are the options I'm looking to buy premium on, the cheap side. What I do is I match those with a technical strategy or a seasonal strategy or something that tells me why I want to be bullish or bearish on that stock. Final
Interesting,
thoughts, Chris.
because hold on, let me add a side note. When I look at that chart of Twitter right now, that stock has been throttled for the last 14 days, around $69. It's moved sideways. The Bollinger Bands tightened up. This thing's going to move. It's going to move soon.
Chart right now, we got it on the screen of Twitter. You're right. It's kind of went into a little sideways mode. So, that's a triangle where it's ready to break one way or another.
Absolutely. And with that 50-day coming up, usually it favors the upside on those 50 days. 2-to-1 chance it's going to go up the next day and the next day. So watch that closely. Yeah, that's a good one. I love that the options are cheap too. Put the two together.
Well, guys, thank you very much for joining us on the podcast today. We've got an announcement for next week. We're going to be doing a couple changes to our schedule, especially for my live streams are going to be starting a couple of hours earlier, closer to the market open. We're also going to be doing some changes to the podcast as well, so look for announcements on that. Till then, have yourselves a great rest of the day, upcoming weekend. We'll see you again next week. Till then, take care. Chris, see you, buddy.
See you, Tom. We'll talk to you next week.
Absolutely. Bye now.